How do you measure inflation? If I measure inflation against something I can manufacture for free, inflation doesn't look that high. If I measure inflation against a yardstick that is fixed, that's thermodynamically sound, then you see the true measure of inflation. S&P is one example of that. This is Miami Beach. Miami Beach runs 96 blocks. There's that much beach. 100 years ago, there was that much beach. No amount of semiconductor technology or factories make more beach. The dollar has fallen 99.8% against the beach in 100 years. That's how you start to see what's really going on with the world's strongest currency. Now I have some bad news for you. We're not in America. We're in another country. Foreign currencies are collapsing against the dollar. This is the Argentine peso against the dollar. In 20 years, the peso goes from 1 to 500. The peso's lost 99.8% of its value against the dollar at the same time that the dollar's lost 75% of its value against the S&P index.
In this video, Michael Saylor gives us the best explanation of CPI and USD inflation you can possibly listen to. CPI and inflation are relative to what we measure them against, and so are their valuations. And the US dollar is the best fiat money out there. If you like what you are watching, please just give us a thumbs up. Let's get to the video.
The world reserve currency is the dollar. It's collapsing against assets like the S&P index, like real estate, like gold, like art. And this is a sobering thought. If we had sound money, the dollar wouldn't collapse. But you've probably seen this chart. This is the dollar collapsing against consumer goods. Consumer goods, the dollar is 95% weaker. It means consumer goods are 20 times more expensive today than 100 years ago. Now, consumer goods are manufactured items, candy bars, bottles of water, Netflix videos. They're things that are coming off an assembly line and they're getting stamped out with a low variable cost. This is the cheapest, least scarce stuff in the civilization, and yet it's 20 times more expensive. Now, a lot of times government officials show you this chart and they say, well, this is the impact of inflation. This, in fact, was generated by the Bureau of Labor Statistics. But the sad fact of the matter is, this is as good as it's ever going to get for you. This is a different picture. What if it wasn't easy to stamp out manufactured biscuits or Netflix videos? What if you had to do work to dig the gold out of the ground? Gold is a bit harder. And so the dollar has collapsed 99% against gold in that same 100 years, not 95%. By the way, gold is not scarce. We keep creating more gold. We get better at it, but at the end of the day, it's a bit more scarce than, Netflix videos, and it's a bit more scarce than drywall. Let's talk about something that's even more scarce. The 500 most valuable companies in the S&P. The US dollar has lost 99.8% of its value against the S&P index over that same 100 years. That is actually a closer measure to the inflation rate. This is the world's strongest currency. This is the currency backed by the country that won every war in the last 100 years. This is as good as it's going to get for you. This is as good as it gets. It will get worse. Now, how do you measure inflation? If I measure inflation against something I can manufacture for free, inflation doesn't look that high. If I measure inflation against a yardstick that is fixed, that's thermodynamically sound, then you see the true measure of inflation. S&P is one example of that. This is Miami Beach. Miami Beach runs 96 blocks. There's that much beach. 100 years ago, there was that much beach. No amount of semiconductor technology or factories make more beach. The dollar has fallen 99.8% against the beach in 100 years. That's how you start to see what's really going on with the world's strongest currency. Now I have some bad news for you. We're not in America. We're in another country. Foreign currencies are collapsing against the dollar. This is the Argentine peso against the dollar. In 20 years, the peso goes from 1 to 500. The peso's lost 99.8% of its value against the dollar at the same time that the dollar's lost 75% of its value against the S&P index. I'll let you do the math. If you run a company in Argentina and you're going to work hard, you're going to have to grow your revenues from 1 million pesos to 500 million pesos over 20 years to stand still.
If we measure inflation against goods that are easily manufactured, thanks to robotics and AI, like processed food, Netflix movies, or cars, the numbers in developed countries don't look so bad. The situation changes when we measure inflation in things that are not easy to be manufactured at scale, like gold or Miami Beach, or the best companies in the world. The numbers get even worse when we change the currency we measure them in, and instead of choosing the USD, we, for example, use the Argentine peso. So what's the winning strategy?
What's the winning strategy? There's only one winning strategy that I see. It's hold the best money. And if you hold the dollar, which is the best currency, you're going to zero. If you hold a weaker currency, you're going to zero in a few years. Gold is a sort of better money than the currency. Stocks are a better money than gold. Bitcoin is a better money than the stocks. But let's talk about this a bit. The conventional organization, company, investor, they think the S&P index, they think corporate equity is the best money. They have monetized it, and that's what they're using. And so I wanted to break down what corporate equity looks like versus Bitcoin. You know, the traditional return of the S&P index is about 7% a year. Well, Bitcoin should, in theory, return 14% a year. It's returned a lot more. It's returning 40, 50% a year over the past 3 years and much higher over a longer period. But I want to lay out the reason that companies don't work as well as perfect money or digital money. First of all, you've got the dilution that comes from management. The management's going to pay themselves 1% of your return every year. You've got the risk of labor. Companies unionize, they have to pay labor. The cost of labor keeps going up. It's another 1%. You've got competition. There's going to be someone that's going to produce more gold or more iPhones or more something, more computers. It's going to cost you another 1%. You've got technology. You had a really good camera business, and then the camera becomes software. It's going to cost you 1%. You've got regulation. The EU is going to actually fine Facebook or Google for doing something on the web. It's going to cost you 1%. You've got taxation. If I can locate your employees, locate your management, locate your company, locate your headquarters, it's going to cost you 1%. And then you've got war. And the war may be a hot war, where you've got a tanker and I blow it up, or it may be an economic war, like a tariff, and I'm just going to put a 25% tariff on you. Companies have all those risks. If you ask what's the cost of it, about 7% a year. What you can expect is over time, over 100 years, you're always going to pay the 7%. Now, what's the implication of getting a 7% yield versus a 14% yield? Because Bitcoin actually avoids that. How does Bitcoin avoid it? The Bitcoin virtues are, we replace management with cybernetic control. The software controls the system, not people. The software does the work for free. I replace labor with a digital system. I replace competition with an immaculate conception. There's only one Bitcoin. Satoshi gave it as a gift to the world. There's no competitor. There's no second best. Why? Because someone created this, gave it away to the rest of us without any beneficial interest in it. That's what makes it unique, irreplaceable, special. That instead of technology risk, like the iPhone 15, Bitcoin is just money, 1/21 millionth of everything there's ever going to be. It's not going to actually obsolete. It's immortal product. In 1,000 years, you're going to want to own 1/21 millionth of everything there is. In 100,000 years, you're going to want to own 1/21 millionth of everything there is. That's how you escape the competitive downdraft, and that's how you avoid the technology destruction. And of course, with regulation, taxation, and war, by being a digital asset, you're living in cyberspace. You can't destroy it. It's indestructible, it's incorruptible, it's global. Bitcoin's going to duck the exposures of these other systems. So what's the implication of that? If you had $1 million today in your company or in your family, and you hold it in cash in the world reserve currency at a 7% inflation rate, in 100 years, you will have, in today's dollars, $977. You will go from 1 million to 1,000. You'll lose 1,000x. It's 1 divided by 2 to the 10th. If you take all your $1 million and buy government bonds yielding 3.5% interest, you're going to have a 3.5% negative real yield. Carry that for 100 years, you're going to have $31,000, 3% of your wealth. If you're brilliant and you invest in the S&P, you're going to have $1 million. You'll have the same value, the same wealth in 100 years you have right now, but no more. If you take half of it and invest it in Bitcoin, and the other half in the S&P, you're going to have $512 million. And if you go 100% Bitcoin, you're going to be a billionaire. All you got to do is flip your $1 million into Bitcoin, hold it at 7% real yield 100 years, and that's the money you have times 2 to the 10th. And so you can see in a very simple way, there's a winning strategy, there's a losing strategy. Every other strategy is, the trading, the investing, is just a waste of time.
Our take. As Michael Saylor points out, inflation depends on what we measure it against, on what we are looking to buy, and on where we live. While there are different ways to protect ourselves against inflation, some allow us to only keep our purchasing power and do not increase it. Some are easier and require less work, like owning an index like the S&P 500, and some need more time and effort, like real estate and its maintenance costs, or owning a company. The best possible strategy might be owning Bitcoin in cold storage. You can take it with you anywhere. There is no maintenance fee. Governments can't stop it. There is no dilution due to humans involved in it. And most of all, nobody, no matter what technology he or she has, can make more than 21 million Bitcoin. As always, do your own research. Don't trust, verify.